Okay, so hey guys, welcome to another trade review. And yes, today we're gonna be looking at the 16th of July trade. Okay, so there we go. So today, let's look at the news. Today we got Wednesday PPI, yesterday at CPI. Okay. Okay, yeah, this one. Okay, so yeah, again, right here you can see we cleared buy side, market structure shift, fair value gap. This is the 14th of July, first presented fair value gap. Okay, so basically this is the current new week opening gap as well. So this week's new opening gap, and yep, here is the C of the new week opening gap. Because we displaced through the new week opening gap high, so what I'm going to expect is for price to reach for the CE of this new week opening gap. Because ICT said before, if price have traded back into a new week opening gap and it displays through like that, right, means it's going to reach in deeper. So we shall see from this fair value gap here to this new week opening gap. Okay, and let's see how many points is there in this. So let's say you went short here 6293, okay, to 6284. So 93 to 84 is roughly 9 points, okay. And stop loss has a place above here. So let's say roughly 6299. So 94 to 99, 5 points. Not really big. Stop loss is fine. Okay, so this is the first presented fair value gap also. Okay, so very good. We have a very nice first presented fair value gap here. We are getting close to the 950 macro. Okay, getting close to the 950 macro here. Okay, here getting close to the 950 macro, and we shall see. So yeah, this is just me studying and tape reading, because at this point in time, and what can we see here? New opening range gap, guys. So new opening range gap, what we're going to draw is the closing price here to the opening price here, and you get the midpoint, which is here. Okay, so from this first presented fair value gap, right now looking back, I definitely will take the trade, because here we cleared buy side, and here if you measure the CE wick, you can see that it respected it. Definitely market structure shift, this fair value gap, and it's the first presented fair value gap as well. Okay, so definitely this is a good trade. Okay, so to the CE new value at 6288, so you enter at 6293 to 6288. That is roughly 5 points. Yeah, so 5 points will go there easily. Yep. And okay, and right now what we can see is euro and dollar in symmetry. Dollar going up, euro going lower. So bam, there we go. Okay, this would be it. Right now looking back in this trade, we got display, we got fair value gap, we cleared buy side already. CE of new opening range gap was there. We got immediate rebalance. Okay, everything was there. First presented fair value gap to the CE of new opening range gap, 70% likelihood chance it will reach. Okay, and we have a displacement, very nice fair value gap like that. There it is. So this would have been a trade that I take. Okay, but yeah, I hesitated a little bit and I didn't get to take it. But you know, some in trading is just like that. But you know, you practice. Yeah, through practicing, keep on doing it, then I'll get it. So let's see. I'm now curious what are the 4 trades that I would take. Okay, remember guys, this is just me looking back. Okay, so guys, this is just me looking back at, like right now the date is already 9th of July. Yeah, right now the date is already 9th of July. If you see here, sorry, it's already 9th of October. So basically looking back at the July trade, and I've been honing my skills, been trading. So yeah, that's basically it. So there we go. This is a very good trade. And right now let's see where's the first trade that happened. Okay, Okay, so this is the 5-minute chart. So right now we are holding at the lower quadrant of the new opening range gap. We got a 5-minute CV here, so we want to see price trade up here and go lower to reach for the new week opening gap here, or does it want to come back up? Okay, but at the moment this will be the short. So if you want to short, you're not going to press short straight away. You're going to wait for price to come up into this 5-minute CV first, because on 1 minute you might not be able to see this 5-minute CV. That's why high time frame parallel to low time frame you must know. And when you know that there's a 5-minute CV here and you want to go short, you have to wait for price to retrace into it. Then only you find your shorts at the quadrant levels of this fair value gap. So right now a short scalp can be going up into this 5-minute CV, but you're not interested in that. Okay, previous day low, we cleared previous day low. Okay, so we got the London sell side here. Okay, we cleared some buy side here, expected in the CB. See a nice reaction after the immediate imbalance here. Beautiful. So now another immediate balance form here. So let's see if the volume want to continue lower to the new opening gap low. So this is the 4-hour chart. Let's have a look at the 4-hour chart here. Buy side cleared here. At the moment, super clean sell side here. We traded up to these wicks respected in this inversion BC. That means what? This is a BC, right? Usually we act as support, but right now it is acting as resistance. And you can measure the wicks here also, from the wicks here, from here to here, and get the quadrant levels. So here should be midpoint, quadrant should be somewhere here. So we failed to reach the quadrant level, but all that I can see right now is we are rejecting beautifully lower. Here might be just midpoint, might be just nice, I don't know, just eyeballing it, but we look at that, rejecting back into the CV. So sell side still here, pretty clean sell side. Okay, so this is still the target right here to downside. So this is looking at 4-hour chart. So yeah, you can see I measured. Okay, I measured here to here, but actually I see here there's a small volume balance. So actually we would have to measure here to here, and let's say eyeballing it, C of it will be here, upper quadrant will be somewhere here. So remember, when there's volume balance, must include the volume balance. Okay, so yeah, right now looking at 4-hour chart, bearish downside. Okay, so this is the 5-minute chart. Don't do anything. Okay, even though right now you can see like, okay, yeah, cleared buy side. Okay, right now you can see like, oh, we literally reach up here and reject lower. It's not filling inside the CV. That to me is showing some signs of firmness to the downside, that it might want to hurry up and clear sell side and reach for the new week opening gap low. So at this point here, I will see these wicks right here. Okay, I will see these wicks right here, and I'll measure from here to here to get the midpoint range, and there we'll see do we have any context level. Okay, so at the moment I'm not really expecting price to reach back up to the CV here, because it went up here but it stopped dead at here and rejects lower. So right now to me it's showing a lot of very bearish signals, but also have to see the intermarket relationship, like what is happening. Okay, so definitely this is the 5-minute CV. On the 3-minute, on the 1 minute is this here. So you just look, when bearish, we look at the upper portion. So on the upper portion, we have an immediate rebalance here, and you have a small CB right here. Okay, and this CB is traded into already. You can see this CB is traded into the, I don't know if you can see or not, but price is traded into the CB, which form the 5-minute CB. That means on about 1 minute is traded into already. Then right here, this fair value gap, you can see bodies respecting. So right now, this is being seen as an order block to me, and we form immediate rebalance. So this is seen as an order block to me. So we can use the old first presented fair value gap at the 14th of July, and the CA of the new opening range gap, bodies respecting below it, use it to reach lower for the new opening gap low. So that's where I'm aiming for right now. 6284 to 6274, roughly 10 points. Okay, so 10 points. Yeah, that's good. Stop loss just place here above the midpoint of this order block. Okay, this is an order block. This candle, this up close candle is the order block. So midpoint of this order block, and yep, we shall see. Okay, what we can see, dollar is lower. Okay, Nasdaq look firm to downside. Down, okay, still pretty firm. Dollar also going lower. So this is little bit tricky, but also we'll continue seeing. So when a dollar going lower, that means you can be a bit patient. Don't just enter right away. Just be more patient. Okay. Yes, so this is the 5-minute CA wick I was talking about. Okay, beautiful. So 5-minute CA wick came up here. I can enter short here. Stop loss just placed above this swing high. Okay, so you can enter short here. Stop loss placed above this swing high. And now we just watch. Do we want to reach for here? This is the target. Okay, the new wick opening gap low. And this is the new opening range gap low. So here can be the first partial, then second partial. Okay, so things still looking pretty nice. Still expecting bearishness. Okay, so what we can see, Nasdaq is below this sell side. When S&P is not below it, but Nasdaq is below it. Nasdaq is firm below it. So remember, these two are sisters. Okay, Nasdaq and S&P. So if Nasdaq is going lower like this, S&P, we can expect it to go lower also. So this sell side right now, because Nasdaq is below it, Dow is below it. So this creates what? Six sister idea for S&P. So S&P, six sister idea. That means right now Nasdaq lower, Dow lower is going to pull S&P lower also. So the lowest first target after clearing the sell side, where is it? Where can price go? So it's the new opening range gap low, which is this one right here. Okay. So right now at this point of time, I'm actually not worried. Even though as long as dollar don't start spooling to the downside, then it's okay. It can just consolidate right now, right here. There's no problem. Okay, here you can go short. Stop loss above here. Because I'm not even expecting price to reach for this 5-minute CB right now. Because this 5-minute CB formation is basically from when 1 minute traded in the CB. So we want it to stay firm. So here is a good place to short. Stop loss just placed above here. Okay, so that means on the 5-minute chart, I'm expecting it as a breakaway gap. Because of this reaction right here. It came up here, rejected lower. So the CE of the 17th of July, first presented fair value gap, that is going to be very important levels, or O levels. Okay, beautiful rejection there. Okay, so right now we see if price going to continue lower. From the 5-minute CE wick, stated here. Okay, there we go. Very nice reaction. Okay, right now what I want to see is, see Nasdaq is opening here. apparently right now, and then it's the same swing low. So we just compare every time you see. Okay, you want Nasdaq to be firm below this swing low, then S&P is very good to go. Beautiful. We are having displacement. Okay, so very nice. Dow also trading lower. Yeah, I entered short at here. It's pretty a displacement, but then the first, okay, not bad. Yeah, so it wasn't filled yet. Okay, so yeah, now we got filled, and for this trade in particular, it's okay. But I would have entered on here already at the 5-minute C-week, because Nasdaq and Dow already show firmness downside. So basically when price reaches this 5-minute C-week, I will enter here. Stop loss will be placed at above this swing high here already. So right now, okay, so we get stopped out. Okay, so why do we get stopped out? The stop loss placement. Okay, the stop loss placement here was wrong. Stop loss should be at least placed above here. Okay, at above the CE of this first fair value gap. Okay, stop loss placement here, it wasn't a good stop loss placement. Okay, so anyway, both also I'll get stopped because price later already touched the new opening range gap here. So from this 5-minute CE week to the new opening range gap here, so here is like 6285.5 to 6277, 8527, 8527, 8 points. So there got 8 points of movement. There I'll get my 5 points already. Okay, yeah, so stop loss has to be at least placed above this minor sell side, right? So we shall see lah. Stop loss has to be at least placed above here. Okay, even though enter at the fair value gap here. Oh, okay, but actually I say stall space here. Yeah, okay, never mind. Here I get stopped out already. So right now what I want to see is price has to come back down, trade back below this CV, trade below it, then it will come up here and it will go down to reach lower. If not, it's going to reverse higher. Okay, so right now we have traded in the 5-minute CB. Yes, right now trading in the 5-minute CB is actually permissible. Why is that? Because we reached for the new opening range gap low already, and the fact that we rejected there, okay, fine. Right now we can accept if we want to retrace into the 5-minute CB. Right now, if you want to enter this 5-minute CB here, your stop loss has to be at least placed above the immediate rebalance here. Okay, here you got the CE week, right? So at least have to be placed above here. Okay, here at least have to be a stop loss placement if you're gonna enter at this 5-minute CB. But yes, on 5-minute, if it's best if you can just place on the 5-minute your stop loss. But if on 1 minute, you can refine your stop loss and you'll be there. Okay. Yeah. So if on 5-minute you're gonna enter short, your stop loss has to be placed here. Okay. Okay, so right now we cleared sell side, there's balanced price range there. Sell side here, balanced price range here, this fair value gap here. So I can enter long here. Stop loss has to be placed here at least. And right now our target we can aim for the first presented fair value gap here. Okay? So let's see. Okay, but you can see the rejection here. But definitely it's not a good trade. Because you see, I'm aiming for price to reach for even deeper at the new week opening gap. And high time frame parallel to low time frame can see this rejection after trading into the 5-minute CB. That's beautiful. Okay, right now looks like a symmetry. Okay, want to see if here form a fair value gap, then I'll take it. Okay, here form a fair value gap, but my stop loss placement is not good. Stop loss placement has to be placed here, at least here. Okay, because this is seen as an ITH now, because it traded into this 5-minute CB, and I don't expect it. Okay, that means right now what I'm anticipating is that it can, right now we're in a trade. Okay, we have a low here, we have a lower swing high here, we have a higher swing high here. So right now I want to see another swing high form, because if there's another swing high form, then we can have market structure shift. Then this will be a ITH, short term high. Okay, so an intermediate swing high is a high with a short term high at the side, and right now I'm anticipating another high to form here. If this form, then we have the market structure here. What does the market structure look like? High, high, and another high, or it can be here, here, and another high. So remember, price is fractal. Dollar is going up, so very nice. Nasdaq has the CV here, very good. S&P also got. Dow don't have, but it's fine. Right now I want it to shoot through the balance price range like it's nothing, or it can just consolidate here. Okay, okay, Dow is not showing nice reaction. Okay, so I closed the trade right away, but actually now looking back, no, don't close I won't close the trade right away first. I'll just leave the stop loss at where it is right here first, because I'm allowing the market structure to form, because here is actually a balanced price range. From here to here, bodies and bodies, this is balanced price range. This is the CE wick. I'm still allowing price to reach for the CE wick right here. See, if it's a CE of the new opening range gap, rejection here, very nice. Here we got see this CE wick, you can measure it one actually. Measure here to here. Midpoint would be somewhere here. Okay, that will be the last point of defense, because right now I'm allowing the market structure shift to form. The market structure to form. Okay, I want this to form a low swing high. Yeah. Okay, so now I'm drawing out the end dog, really small end dog. And yes, as long as Nasdaq is below this green line, which is the same sell side level, I'm fine. And I want Dow to come back below it also. Then only it will pull down S&P, because the federal dollar is going up, which is good. Forward chart, got the 4-hour CE wick right here. Okay, right now we have formed a swing high. Definitely stop loss is still there, it's not going to be moved. I want to see price start trading through right now here. And because you see the balance price range here, the fact that it respected it here, I don't like to see that it has to trade below this BC like it's nothing, but you see it's rejecting up here. Okay. Okay, so that's when, yep, here I'll get stopped out. So basically here already tell me that, okay, see, the fact that we respected here, start trading up, I closed the trade manually already, so that was a good call. So that's the second trade there, guys. Immediate rebalance. Okay, right now come back up to 5-minute CB. Want to see rejection once again here. The reaction will tell me whether are we still bearish or bullish. Because there we got a 4-hour CE wick up here also. Remember, okay, this 4-hour CE wick right here. So we had rejection at the 5-minute CE wick again, 5-minute CB again. Okay. once again, but right now dollar is pulling lower, so not very good. What we shall see. Okay, now moving very nicely. It should really start moving already. Okay, let's say enter back short right here. Your stop loss has to be at here now. Okay, because we want to expect firmness, we want price to start shooting lower. Okay, very nice, very nice. It has to start rejecting from here now. Yeah, it has to start rejecting lower because dollar is going lower. So this is when we demand the things that we want to see happen. Okay, so very good. This short is okay, no problem. Well, Dow is still trading below it, but Nasdaq has come above it. When S&P is come above it, when dollar is going higher, so I want to see Nasdaq or S&P come below it. Hold inside this CB and this BC inversion failure. Okay, I closed the trade right away. My question is, why did I do that? Maybe at this point of time I have been losing like 2 trades already, so I feel like, oh, I want to get it back. So basically I overtraded for this day, 4 trades. Okay, so looking at the P&L, I start feeling that, oh my god, it probably sucked. Losing 2 trades in a row, $33.75. So here there's nothing yet. Nothing much. Okay, nice. Have a displacement here. Finally, once again, we have displacement through the 5-minute CB. Okay, so right now, I want to see. This is the balanced price range. It has to close below CE of it at least for me to consider entering this trade. No, I wouldn't have entered this trade. Okay, but actually dollar was pulling higher. Nasdaq a CV, S&P a CV, and Dow also have a CV. Okay, pretty asymmetry. So right now what I want to see is Nasdaq to trade below this swing low. Then it will clear things up and everything will be easy to go because dollar is getting higher already right now. At the moment, only Nasdaq is the one that's giving me the bad sign. So that means if I'm in this, before I enter the trade, I like to see Nasdaq. Nasdaq not doing what I want to see, so it's not a trade. Okay, nice. Nasdaq did the rejection, beautiful. So right now only I might consider entering the trade here. Okay, very nice. Okay, the fact that it respected here again, not very nice. When dollar going lower also. The dollar is pulling lower. So this is right now I'm on demand. Okay, dollar going lower. I want Nasdaq to shoot lower below the sell side, because if Nasdaq were to shoot below and stay firm already, then that means the S&P trade will still be okay, because Dow is below this sell side in this fair value gap, but most importantly is below this green line, this sell side level. And if Nasdaq start being firm below this sell side level, it will unlock the Six Sister idea for S&P. That means it's going to pull down S&P to clear the sell side, even if dollar is going lower. And that just means that we are not in a symmetry market. It doesn't mean it cannot go lower. But right now, this is what we have to demand from Nasdaq. Okay, and because Nasdaq didn't do it, I just closed the trade. So keeping the trade small, keeping the loss small, and there we go. That is basically the 4 trades that I lost today. $46.25 loss. But today we have saw that there was a very nice 930 first presented fair value gap back into the new week opening gap, and that was actually the only trade idea that I would have taken. But you know, at that point of time when I was trading, I missed that trade idea, and I just decided, okay, never mind, let's wait for another trade idea. But actually, all the trades that I take today, I would say it's okay, because all had displacement. So yeah, that's it for today.